Today, I want to talk about how more bank runs are coming and how banks are being made to use the bailout facility by the Fed. I want to explain how this will lead to more banks collapsing, how it will lead to liquidations and margin calls, and how that will lead to the AMC squeeze. So stay tuned and let's make some money. Also guys, if you haven't already, be sure to check out the testimonials on the MMTG website for a number of users that have been consistently making profits every single day. And now I'll dive straight in with the key information. So, Frank's Place tweeted saying the US bank regulator says that new liquidity rules are needed to handle bank runs, clearly suggesting current runs are not enough to stop another bank run. It says a top US banking regulator on Thursday called for new liquidity rules to help lenders respond to runs by depositors of the kind that failed Silicon Valley Bank and other mid-sized banks last year. The acting comptroller of currency said, "I believe a new targeted regulatory requirement for mid-sized and large banks to have sufficient liquidity to cover stress outflows over a 5-day period warrants serious consideration." Basically suggesting that if a bank run lasts any longer than 5 days, mid-sized and large-sized banks cannot handle it. So hang on, right now even the largest banks in the US are not designed to handle bank runs lasting a few weeks or a few months. They can barely survive 5 days. You could maybe understand small banks not being able to last too long in another bank run scenario, but this is even for mid-sized and large banks. And as a result, the US government is planning to push more banks to use the Fed's discount window and bank term funding program in order to enhance liquidity. Now, liquidity is a very interesting subject which we touch on quite a lot with various liquidity pumps, and we're seeing a few more of those happening right now. Clearly somebody out there is desperate for liquidity, but I'll touch on that in a second. It says the OCC, Federal Reserve and FDIC are currently working on a new discount window rule proposal, suggesting that banks are going to be required to tap the Federal Reserve's discount window at least once a year to ensure lenders are ready for troubled times. Now, this to me sounds like the Fed is going to be providing regular yearly bailouts to these banks, clearly showing just how stressed they really are. Also, if you didn't know, the bank term funding program actually expires this March, and therefore banks don't have long to make use of this window or this bailout facility before it expires. And when this bailout facility expires, which at the moment it's not planning to be renewed, that's over $150 billion these banks will have taken away from them. Again, $150 billion in more losses, which will cause more margin calls. So let's talk about these liquidity pumps for a second, and you might recognize both of these names, DWAC or DWAC and PHUN or FUN. Both of these stocks were linked to Trump, and back in 2021, DWAC ran from $10 to over $100 per share, and FUN ran from $2 to $20 per share. As you can see, DWAC today is up 69%, and over the last few days started at $17 per share and is now already touching $50 per share. Maybe another $100 pump incoming. Now, what's interesting about both DWAC and FUN is the Millionaire Mindset Trading Group absolutely capitalized on both of these stocks today, making some brilliant gains. So I told the team exactly when I was buying DWAC and PHUN and when those stocks were even breaking out. Currently, Freakdeline is sitting on 63% gains on PHUN, Firefly locked in 21% gains on PHUN, Zep locked in 3 different 5% trades and a 7% trade today, Mr. Mo locked in 14% on DWAC, and John made over $120 on PHUN as well. As you guys know by now, these aren't just rare one-off trades that never reoccur with tons and tons of losses. We get gains like these, regular and consistent gains every single day. So guys, be sure to sign up to the Millionaire Mindset Trading Group using the link in the description below. Now, the reason why these hedge funds are so desperate for liquidity is because we're already seeing more hedge funds starting to fail. This article says ex-millennium trader Cowley Sandbar shuts down his hedge fund. It says his investment firm once managed $2.5 billion in total assets and is now down to just $400 million. Now it says he's going to continue this small $400 million as a family office, but again, he's taken on significant losses. This family office will likely try and keep a hold of any short positions they still have, or alternatively pass them over to a larger hedge fund like Citadel. But it says Michael Cowley's Sandbar Asset Management has shut down its hedge fund as it struggled to grow its assets. The firm returned capital to its investors last month, saying the money pool never reached critical mass, and obviously they lost tons and tons of money. Now what's most interesting is this paragraph here. It says equity-focused hedge funds have found it difficult to raise money following years of mediocre returns and investors shift towards multi-strategy investment giants. So hedge funds focused on stocks are complaining about mediocre returns, but when I look at the stock market, I see nothing but incredible returns, like Nvidia up over 150% in the last year, and many other stocks in the Magnificent Seven also up 30-50% plus. It's likely because they have been locking in these 150% gains on Nvidia, but have also had massive short losses. What's most interesting about Cowley is his employment history. Previously, he was employed by Millennium Management, and before that, Citadel Securities. So this is an ex-Citadel employee who's just lost tons and tons of money in the stock market. And what's also very interesting is that currently the S&P 500 is setting new all-time highs, while hedge funds are massively shorting stocks. That to me sounds like a recipe for disaster for these hedge funds and a recipe for the squeeze. That is very interesting that hedge funds are shorting so heavily, especially when the S&P 500 has been doing nothing but going up and up and up. Again, just even more large short losses for those short sellers. Speaking of which, hedge funds have currently accumulated the largest short position on a 10-year Treasury in history. It says hedge funds are now short more than 889,000 contracts on the 10-year Treasury notes. Again, what's interesting about that is this short position hasn't been working out too well for the second half of 2023. The 10-year Treasury notes ran from 3.4% to 4.99% at their peak. Yes, through November and December, that did fall to 3.79%, but is now back on the rise through January, already back up to 4.1%. If this upward trend continues through February, March, and potentially April, the 10-year Treasury note could be hitting new all-time highs. Especially with inflation back on the rise, maybe interest rates will need another quarter basis point rate hike. And that would be absolutely disastrous for the hedge funds that are shorting the 10-year Treasury note, just like Citadel. Now finally, I also wanted to quickly touch on Garwood Securities LLC that had to pay a tiny fine of $100,000 for violating Regulation SHO. Garwood Securities accepted 2,000 short sale orders without even locating the shares between 2016 and 2019. Obviously, these trades happened quite a while ago, but if Garwood Securities were doing that undetected for over 3 years, just think of how many other hedge funds have done the exact same thing. They placed 2,000 short sale orders, which they could have shorted millions, if not tens of millions of shares with, and only had to pay a tiny fine of $100,000. Not 100 million or 100 billion or 100 trillion, $100,000. I'm sure they made more than $100,000 in one singular day by illegally shorting securities without locating the shares first. And they didn't just commit this crime for a single day, they committed the crime for 3 years straight. This shows just how useless the SEC is at actually catching these criminals and implementing proper punishments. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.